Ram, one of America's most iconic truck brands, has just sent a seismic shock through the automotive industry. Massive price cuts across its lineup that no one saw coming. We're not talking a few $100s off here and there. These are deep, aggressive discounts, in some cases up to 30% off MSRP. Ram 1500s, HDs, even luxury trims like the Limited and Rebel are being slashed like it's a liquidation event. Dealerships are scrambling to offload inventory, and buyers are rushing in, wondering if this is a once-in-a-lifetime deal or a sign that something's seriously wrong. Behind the flashy banners and blowout sales lies a bigger, more troubling story. A brand under immense pressure, a market that's shifting under its feet, and a parent company, Stellantis, that's facing one of its most critical turning points in years. If you've ever considered buying a Ram truck or wondered what's going on behind the scenes in Detroit, you'll want to hear this: that Ram has officially ignited a pricing war, and the numbers are staggering. Reports from dealerships across the U.S. show that Ram 1500 models, especially trims like the Bighorn, Laramie, and even Rebel, are seeing discounts that range from $7,000 to $12,000 off MSRP, and that's before additional dealer incentives. Some dealerships are advertising zero down payment, 0% APR financing, and cashback bonuses for trade-ins. The Ram 2500 and 3500 heavy-duty models, usually immune to market fluctuations, are also being heavily discounted, especially the gas-powered versions. Some lightly used Rams are now cheaper than compact crossovers. Inventory levels are so high that trucks are being stacked on grass lots and remote storage areas, something rarely seen in the post-COVID vehicle shortage era. Factory-backed programs are clearly designed not just to sweeten the deal, but to move massive quantities of metal fast. And let's not forget, this is happening in June, not the traditional end-of-year clearance period. That raises big questions. Why now? And what's forcing Ram to hit the panic button? The root of this pricing bombshell isn't generosity, it's desperation. Ram is in trouble, plain and simple. Over the past 12 months, sales of Ram trucks have dropped significantly, with industry analysts reporting a 25% year-over-year decline. In some key markets, that's a brutal figure for a brand that once challenged Ford's F-Series for dominance. Much of the decline comes down to consumer behavior. Buyers are tightening their belts due to inflation, high interest rates, and fears of a recession. But Ram's problems go deeper. The brand hasn't released a major update to the 1500 since its redesign in 2019, and while it still offers luxury and power, it's been outpaced by Ford's tech-heavy F-150 and Chevy's refreshed Silverado lineup. On top of that, Stellantis, Ram's parent company, has been hit with multiple challenges: a slow EV rollout that's losing steam, poor customer satisfaction ratings, and mounting tension with U.S. unions over job cuts and foreign production shifts. Add to that a huge surplus of trucks ordered months ago in anticipation of demand that never materialized, and you've got a perfect storm. Ram isn't just cutting prices to be competitive, they're doing it to survive. For truck buyers, this price crash is both a golden opportunity and a potential trap. If you've been waiting on the sidelines for the right time to buy a Ram, this is it. We haven't seen markdowns like these since pre-pandemic clearance sales in 2018. Buyers can now walk into dealerships and negotiate prices below invoice, especially if they're paying cash or trading in an older vehicle. Incentives are stacking fast. Dealers are even offering free upgrades, extended warranties, and service packages to move units off the lot. But there are caveats. Buyers should be aware that this kind of price crash can lead to depreciation. Chaos. Trucks bought today at 30% off could lose significant resale value within a couple of years. If Ram continues struggling, parts availability, service support, and dealer networks could also shrink. And if Stellantis decides to pivot production offshore or rebrand Ram in the future, owning one might not feel as secure as it once did. Still, for the short term, value-focused buyers could walk away with a truck that offers tremendous capability, luxury, and towing power for the price of a mid-size SUV. Looking ahead, Ram's future is murky. The company is banking heavily on its upcoming Ram 1500 REV, a fully electric pickup that was supposed to challenge Ford's Lightning and the Chevy Silverado EV. But interest in electric trucks has cooled drastically in the last 6 months. Surveys show that American truck buyers are more concerned about range, charging infrastructure, and battery costs than ever before. Plus, Ram is late to the party. Ford and Rivian have already established early market dominance. Even more concerning, Stellantis' EV strategy appears scattered, with many models being delayed or rolled out only in limited markets. Meanwhile, loyal Ram fans are asking, where's the innovation? Where's the bold new vision? If Ram wants to avoid the fate of once great brands like Chrysler or Oldsmobile, it needs more than just discounts. It needs leadership, clarity, and product excellence. Without that, these price cuts might just be a short-term sugar rush masking long-term decline. Behind the glossy marketing and upbeat Instagram ads, the atmosphere inside Ram dealerships is tense, and in some cases, chaotic. Sales teams are under immense pressure to clear out bloated inventory. Several dealers have reportedly been given strict monthly quotas to move a minimum number of units or risk losing factory incentives. Floor plans, the loans that dealers use to finance their inventory, are racking up interest as trucks sit unsold for months. According to insiders, dealers are losing money on each sale just to stay afloat. Some stores are quietly canceling future orders, while others are calling longtime customers with urgent, borderline desperate offers, like "We'll buy your trade-in at 110% of value if you drive off today." There are even reports of regional managers offering backdoor bonuses to high-volume stores just to hit sales targets. It's dealership survival mode, and while it might benefit buyers for now, it points to a deeper breakdown in Ram's distribution and production planning system that Ram's long-hyped entrance into the EV market with the Ram 1500 REV was supposed to signal a new era, but it's already looking like too little, too late. The truck was introduced with bold promises, class-leading range, ultra-fast charging, and advanced tech features. But the delay in delivery, lack of real-world availability, and stiff competition from Ford, Rivian, Tesla, and GM has made Ram look more reactive than innovative. The REV is facing a marketplace where EV enthusiasm is cooling, especially in the truck segment. Fleet managers are backing out. Rural buyers are skeptical, and dealerships don't yet have the infrastructure or knowledge to sell these vehicles properly. Plus, with battery costs still high and Ram's manufacturing scale still unproven, early pricing looks uncompetitive. The REV might be flashy in theory, but in this environment, flash alone won't sell trucks. If it flops, it could be a financial catastrophe for Stellantis. That Ram's pricing collapse isn't just affecting new trucks, it's sending shockwaves through the used market too. Wholesale auction prices for used Rams are already falling. Dealers who stocked up on used 2020 to 2022 Ram 1500s at high prices are now finding it hard to break even. Private sellers are also feeling the sting as trade-in values have dropped by thousands in just a few weeks. If you're trying to sell a Ram right now, expect lowball offers, because buyers know the new ones are practically the same price. For used truck shoppers, this is both a blessing and a curse. Yes, prices are falling, but so is confidence in long-term value. This downward spiral could also spill over into other truck brands. If Ram resets the price ceiling, Ford and Chevy may be forced to follow. It could signal a full-blown price war across the entire pickup market. The core issue behind Ram's fire sale pricing can be traced back to overproduction during the post-pandemic boom. In 2021 and 2022, manufacturers were scrambling to meet demand after COVID-related shutdowns. Ram, seeing record sales and assuming continued growth, ramped up production aggressively. But by 2023, the economy began to slow, interest rates rose, and buyers pulled back. Now, Ram has too many trucks, not enough buyers, and a financial noose tightening around its neck. Worse yet, many of those trucks were built with premium features, meaning higher production costs that Ram now has to eat in discounts. This is a textbook case of misreading the market, and now the brand is paying the price. The question is, can Ram course correct before it's too late? With Ram slashing prices, the pressure is now squarely on Ford and Chevy. Will they match Ram's aggressive deals, or will they try to hold the line on pricing to protect profits? Ford's F-150, the longtime sales king, is already offering incentives, but nothing close to what Ram is doing. Chevy's Silverado sits somewhere in between. This puts the competition in a tricky spot. If they hold prices, they risk losing customers to Ram. But if they cut too deep, they risk their own margins and brand equity. We could be on the verge of a new truck war, one not driven by features or horsepower, but by pure pricing power. For consumers, that could mean deals across the board. For manufacturers, it could mean profit erosion, market instability, and long-term fallout.